Are markets back in risk-on mode?
I think we're beginning to see a move back, but again, there's still an enormous amount up there for grabs. I mean, at the end of the day, we may have a short-term extension, but what is that going to involve, and does the shutdown continue? If the shutdown continues, the economic impact continues, certainly in the short term.
So how are you telling your clients to play the US situation and its impact?
Well, we don't see the impact on growth being significant, assuming we get a reopening of the government relatively soon. Our view is that the economy will accelerate through 2014. We're looking at growth close to 3%. And that's a very benign environment for investors, particularly looking at domestic themes. And our UBS house view is very much focused on domestic themes, both in the US and here in the UK.
All right, I'll come to those in a sec. Early this month, you said if the shutdown is short, we'd get the taper in December. Is it still short?
Well, this is the issue. I mean, if the government doesn't reopen on or about October 17th, you're looking, say, for the full month, an impact on GDP of close to 1%. So that has to have some bearing on Federal Reserve thinking as we go into December, especially given the lack of data. So our assumption would be that, yes, they will have a basis to move in December, but there is clearly a risk now of a delay, simply reflecting the vacuum of data and the influence of the government shutdown through the quarter.
You expect 7 to 8% earnings growth, I believe, for 2014. We got resumption of growth on one side, central bank support with it. On the other side, though, threatened political risk and hiccups in growth. If the latter were to come to the fore, how would that hit your targets?
Well, I mean, it clearly would hit the target around the earnings number and around, obviously, the risk in terms of the valuation of the market. But our assumption is that these issues before us are actually short-term. Indeed, actually, there is the possibility of a longer-term agreement around taxation, say, for instance, tax reform, that could be a very positive impact in the US market. But the particular thing here, actually, is that the deleveraging process in the US is drawing to a close. Our house view is that it is ending, and that sets the US apart in the developed world, something very different in terms of the financial sector's ability to support domestic revival.